The Trump rally ranking among the top 5 post-election rallies in history. But is it just the beginning of a huge run-up in stocks? Joining me now is Trump economic advisor, Fox News contributor Steve Moore, Scott Martin of Kingsview Asset Management, and a Fox News contributor, and Jack Hough of Barron's Magazine. A great group. Steve, first to you. Now, we put together a list of post-election rallies, big post-election rallies. The biggest, actually, was by Herbert Hoover, and, of course, that was just on the eve of the Great Depression. But right next to him, number 2, is John F. Kennedy. Huge post-election rally of 8.8%, and then it went straight up from there. I'm just taking a wild guess, Steve, but I assume you think Trump's going to be more like JFK than Hoover.
Well, I sure hope so. And by the way, I don't think anyone wants to have their name in the same name as Herbert Hoover when we did see the Great Depression and
but JFK ain't bad.
Yeah, that's true. And look, we saw the market explode in the 6 weeks or so after the election. Now it's been kind of dwindling down a little bit. We flirted with the 20,000 mark. But here's the point. Long term, I think if you invest right now in the stock market and Donald Trump does the things that says he's going to do, and there's always a risk premium of whether he can get this done. But David, I'm here to say if he does get it done, if he does get those business tax down and the regulations down and the energy policies put in place, I do think you see a big boom. And by the way, in the Reagan years, that boom lasted for 18 years. So
exactly.
It could be the start,
Great point, Steve.
Really big.
Jack, Goldman Sachs had an interesting piece today, or an interesting comment today. They said if you look for stocks from companies that have been paying a lot in taxes and corporate taxes and don't qualify for any of the loopholes, those are the stocks to get, because those are the ones who are going to see their stock or their tax costs go way down. Do you agree?
I do agree with that with one caveat. It's true. I think, if anything, the infrastructure stock market play is a little overdone right now. The tax cut play is a little underdone. Some of these names deserve bigger price hikes. But when you look at the companies that pay the most taxes in the U.S., it's dominated by domestic companies. There are a lot of retailers, and retail is in trouble. Don't go loading up on retail shares just because they pay a lot in taxes. 3 names I'll give you quickly. Discover Financial, which I like anyhow, with or without a tax cut. CVS, which I think is more a healthcare business than a retailer. Its prices come way down. And Altria, which sells smokes here in the U.S. It's a little pricey for my taste, but it would sure look cheaper with a big tax cut.
Good stuff. Thank you very much. Scott, the CME. You were at the CME today in Chicago. I can't think of any trading floor that is more pro-Trump than the folks in the CME. Am I wrong on that?
David, you are 115% right. In fact, which is about the value of the stock of the CME these days, because it's risen dramatically since the election for 2 reasons. One, because, yes, the CME is pro-Trump, and number 2, because of interest rates. Interest rates have gone up, especially on the long end of the curve. That is good for exchange stocks.